Welcome to the Fear and Greed Daily Interview. I'm Sean Aylmer. The life insurance sector copped a hammering during the Royal Commission into banking, and honestly, rightly so. AMP admitted to collecting life insurance premiums from dead customers, while audio is played of another company essentially bullying a young man with Down syndrome into buying a policy. Since then, though, there's been a major shift in the sector. The big four banks, as well as AMP, have all sold off their insurance divisions, but there was a huge amount of reputational damage done to the broader industry. Today, I wanted to get a feel for how the sector is recovering with an insurer that has built a successful business by picking and choosing the professions it'll insure, and then sharing the profits with those members. Michael Pillemer is the Chief Executive of PPS Mutual and is my guest today. Michael, welcome to Fear and Greed.
Thanks, Sean. Great to be with you.
So how much damage was done to the broader sector from the Royal Commission?
Sean, the damage to the sector has been huge. Who would have thought that AMP, who was the bastion of the life insurance industry, would ever sell its life insurance operations and put its book into runoff? Ironically, while Commissioner Hayne stopped short of forcing the banks to divest their life insurance and financial advice operations, this has happened anyway due to the reputational fallout. As you mentioned, ASIC have also come down very hard on the sale of direct life insurance, particularly in relation to unsolicited cold calls. And look, I think this was always a bit of a time bomb waiting to go off. Unfortunately, this has distracted from the invaluable support that the sector provides, both individuals and the community. And, every year about $12 billion is paid out in claims to over 100,000 Australians. And having been in the industry for over 35 years now, I've seen the difference that this can make to people's lives.
So it's really worthwhile focusing on this just a little bit, and let's take life insurance to begin with before we get into more of what you do. Life insurance itself has got such a bad reputation, and the man in a cardigan selling you the policy has, I sort of grew up with that kind of image. But at the end of the day, life insurance, and most of us actually get it through superannuation anyway, is a really important part of the economy.
Yeah, it is very much so. And you mentioned superannuation. A lot of people think they've got enough insurance in their super fund, but these are really designed as group benefits. It's not tailored to the individual's needs. And most of the time, insurance in one super fund is both the quality and the amount of the cover is inadequate. But insurance plays a hugely important role in the community. Absolutely. And, it also plays an important role in individuals' lives and protecting their lifestyles and protecting their dignity.
Yeah, and when I think about why I have life insurance, if something happens to me, what happens to the mortgage, what happens to my partner, what happens to my children, at least if something happens to me financially, they don't have to worry about those things. And I think there's an enormous benefit, not just financial, but peace of mind as well.
Yeah, and most people don't realize that your ability to earn an income is your most valuable asset.
Yep.
For most people, if you think about a young professional, for example, over their lifetime, they'll earn several $1 million, if not tens of millions of dollars. And yet a lot of people will insure their home and their car, but they won't insure their income in the event of sickness or injury.
So I'm going to ask a slightly embarrassing question here, Michael. When I think of income protection insurance, I do think of that in the life insurance bucket. Should I actually be thinking of that in the general insurance bucket?
No. So income protection would most definitely fall in the life insurance bucket, as would life insurance or death insurance, total and permanent disability insurance, and also trauma insurance.
So your business, you insure medical, commercial, legal and industrial professionals, is that right?
That's correct.
Okay, and so why focus on those areas?
Yeah, it's a great question. I think the reason is partly historical. PPS Mutual is based on the highly successful PPS business that originated in South Africa. It's based on that model. Just to be clear, PPS Mutual is an Australian entity that's owned by its Australian members in the same way that PPS South Africa is owned by its South African members. Mm-hmm. PPS was started during the Second World War by 8 dentists who recognized that their most valuable asset was their ability to earn an income, but they couldn't get adequate protection at that point in time. And so what they did is they decided to self-insure. They then started getting approached by some other dentists. Then the doctors approached them and said, can we be a part of this? Then the lawyers, then the accountants, the engineers, and so on. Today, PPS Mutual is the largest multidisciplinary group of professionals in the world, and it's also the largest mutual company in South Africa. So the way that the model works is that to become a member of PPS, you need to meet certain eligibility requirements. Once you meet those eligibility requirements, that then opens up the gateway for you to be able to obtain product from the company. The key difference between the PPS model and, for example, other insurance companies in the market is that when it comes to the end of the financial year, because PPS is a mutual and a mutual is owned by its members, the members get to share in the profit. So at the end of each financial year, with other insurers in the market, the profit would be allocated to external shareholders. With PPS, the profit gets allocated to the policyholders or the members.
Okay.
And this is a key difference. Just to go back to your question about the nature of why professionals, one of the reasons why the model is so successful is because professionals make a great member base for life insurance. They understand the need for insurance. They generally have a lower risk profile. They have more stable and higher incomes. And we can also design products specifically for them.
Yeah.
Importantly, they also understand that work is wellness. So the more quickly they get back to work, the more quickly they're going to get better. So all of this results in greater profits for the insurer. So this results in lower lapse rates.
Yep.
Customers stick around for longer.
Yep.
Because if you think about it, if you're a member and you feel that you've got a product that's as good as anything else that exists in the market, but instead of the profits going to external shareholders, the profits are coming back to you. Why would you go anywhere else?
Yeah.
And so PPS Mutual's lapse rates are 3%, whereas the industry average is 13%. And your low lapse rates have a huge impact on your profitability. And so this becomes
self-fulfilling,
a self-reinforcing cycle of success.
Yeah. Stay with me, Michael. We'll be back in a minute. My guest this morning is Michael Pillemer, Chief Executive of PPS Mutual. There used to be lots of mutuals around and then they were acquired or shifted.
Yep.
And so we've been through the phase of banks and other big financial service organisations like for-profit listed organisations running life insurance businesses.
Yep.
Is it likely that we are going to shift back towards more of a mutual structure such as PPS is? You guys are obviously very successful and your members are happy. Do you think you will see more mutuals emerging again, or is that boat passed by?
Yeah, look, it's interesting. All of the large life insurers in Australia used to be mutuals.
Yeah.
And I remember this really well because I arrived in Australia in the late 80s. And that was the case at that point in time. And then there was this race for growth between AMP and National Mutual.
Yep.
And it was all about who could be the biggest, not who could be the best, who could be the biggest. And they started writing a lot of capital guaranteed business. They depleted their reserves. And as a result, they decided to go to the market to raise more capital. It was a similar story for all the mutuals in the market at that point in time. And in the process, in raising the capital from the markets, they demutualized, which means that, the result is today PPS Mutual is the only mutual in the retail advised insurance space.
Is that right?
Yep, with a profit share for members. So it's quite a unique situation. What a lot of people don't realize who have grown up in Australia over the last 20 years or so, because there haven't been any mutuals, a lot of people don't realize that actually mutuals are very big worldwide and still account for 23% of the global life insurance market. In fact, in the 10 years following the GFC, mutual life companies performed really strongly, growing at 23% compared to 7% for the total life insurance industry. So I believe that there is an opportunity for more mutuals in the Australian market. But it's an interesting one because, how do you set up a mutual today?
Yeah.
You require a lot of capital.
Yeah.
It's a different situation to the one that I described with the 8 dentists.
Yeah.
You really need a large mutual to come in and fund the business.
So tell me, has COVID made much of a difference, not just to mutuals, but to the life insurance and general insurance sector? Have people thought more about things because of COVID? Have they dropped off because of financial reasons? I'm just interested in the impact of COVID.
Yeah, no, it is an interesting one, Sean. Look, I think people undoubtedly are a lot more conscious about life insurance with COVID. I think that's a good thing. It's interesting. People don't like to think about their own mortality or their own morbidity.
Michael, I'm not dying. I don't know whether you realise that, but I'm not.
Well, Woody Allen said, I don't want to achieve immortality through my work. I want to achieve immortality by not dying.
It's a fair call.
So and because people don't like to think about their own mortality, they push it into their subconscious. And I think that's one of the reasons why people aren't proactive about taking out insurance. And I've seen this. Taking out appropriate life insurance can be the most important financial decision an individual ever makes.
Yeah. Now, look, PPS Mutual, your channel to market is via financial planners, is it?
It is.
Okay. So it's not, if I was a dentist or a doctor, I can't necessarily just ring you. I need to go via a financial planner.
Yes. I mean, you could certainly ring and we could
You'd recommend
an advisor if you never had one. But we believe that professionals require professional advice and counsel. So we work through financial planners. I think life insurance is a lot more complex than people realize.
Yeah.
And, an advisor can help you determine how much insurance you need in the first place. They can help you with the structuring. Do you fund through superannuation or not? Do you link benefits? Is it stepped or level premiums? What benefit period do you have?
Yep.
What options matter the most to you, for example, such as claims indexation? So an advisor can help you with that. And on top of that, they can help you get through the underwriting process, review your insurance on an ongoing basis, and very importantly, help when it comes to claim time. So the APRA statistics show that the proportion of claims paid for individual covers are far higher, much higher, where an advisor is involved.
Right. No, I'm a huge fan of financial planners. I think everyone should have one.
Yeah.
Michael, thank you very much for talking to Fear and Greed.
That's an absolute pleasure. Thank you, Sean.
That was Michael Pillemer, CEO of PPS Mutual. This is the Fear and Greed Daily Interview. Join me every morning for the full Fear and Greed podcast with all the business news you need to know. I'm Sean Aylmer. Enjoy your day.